Ladies and gentlemen, good day and welcome to Strides Pharma Science Limited Q4 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Abhishek. Thank you, and over to you, Abhishek.
Thanks. A very good afternoon, and thank you for joining us today for Strides earnings call for the fourth quarter and fully ended financial year 2024. Today we have with us Arun, Founder, Executive Chairperson, and Badri, Managing Director Designate, to share the highlights of the business and financials for the quarter. I hope you've gone through our results release and the quarterly investor presentation, which have been uploaded on our website as well as stock exchange website. The transcript for this call will be available in a week's time on the company's website. Please note that today's discussion may be forward-looking in nature and must be viewed in relation to the risks pertaining to our business. After the end of this call, in case you have any further questions, please feel free to reach out to the investor relations team. I now hand over the call to Arun to make his opening comments.
Thank you, Abhishek, and good afternoon, good evening to everybody joining us today for our earnings call. It's an honor to talk to all of you, especially on completion of what FY24 has been an exceptional year for Strides. We came back strongly from a difficult FY22, announced publicly a reset strategy, and I'm very delighted to announce today that not only have we completed all what we aim to achieve in our reset, we have done most of those much ahead of time, and we are now very delighted the way we are now positioned for future growth. It's been a pleasure leading this company. We have made some announcements today, which we will talk briefly. I continue to be the Executive Chairman of the company, and I will be on all the calls going forward. But having said that, we are building the future Strides for the next decade, and I'm delighted to have with me today Badri, who's been a long-standing CFO and Executive Director, as our MD designate, and other colleagues in the room who could address some of the questions. Overall, it's not often that the company gives guidance or an outlook. We did because we were operating under difficult circumstances, and we continue to do that for the next year because we have one source announced. So it was important that we guide investors of where the business is going. So if you look at the FY24 performance, this has been a best year, both for revenues and absolute EBITDA. So also in the best quarter, we have been very, very focused on optimization of our business, on cost containment, OPEX leverage, and also growth. It's been a very pleasant outcome. Like I said, we have achieved all our outlook, including debt, far ahead of our scheduled 3x debt to EBITDA ratio, bolstered by the high end range of the EBITDA that we achieved. And of course, we have also completed our network optimization across the company. We now believe the reset and the cost-effective strategies have been complete. Growth investment started a few quarters ago, and you would see a very different Strides with product profiles and approvals in the next year or so. We are obviously delighted with a very critical approval this morning that we received for the U.S. for sucralfate. We're also happy that it just adds to our basket of over 35 products that we are almost the sole Indian player. This strategy has played out for us for many years, but we have now recently started adding products of larger value and size. We're delighted with our market share with Suprep. We have been a very quick to-market player in that product, which is very contrarian to our strategy of launching products at the very appropriate time when we get the right price and we are sure of the right market share. That strategy will continue, and I will now briefly take all of you through some of the highlights. Revenues were a shade under $500 million, but all markets grew. Our key focus market, our new growth markets have grown exceptionally well. Most of you know that we have a small business in the institutional segment. That business was impacted in the last financial year by low allocation of tenders. This resulted in kind of muted performance in FY24, but I'm now pleased to announce that we have received a significantly higher allocation on this program for the next 2 years, and you will see more upticks in this part of the business in the second half. Importantly, we have, especially in we have secured very significant product approvals. So I'm guiding the investors and analysts and individuals who follow us to note that FY25 will continue to be an important year, but significant growth will come only in H2 because a lot of new product approvals and launches are expected only in that period. What was also important for us in the last 2 years was consistency. And unlike our first avatar, we had consistent quarters of revenues. Gross margin was very, very in a tight space between 59 and 60%. This is almost a 12% uptick from where we started. EBITDA margins nicely moving up from 16% to 19.3%. We would like to get to our historical 21% EBITDA in the next year or so, and there's some more work that is happening that will ensure that we get there. And adjusted PAT has been increasing steadily, and we have a PAT of around 200 crores after loss pickup of Stelis, and that is something we can discuss later. But Stelis reported its first ever quarter where it had a break-even as we guided. We expect Stelis to be profitable, the division to be profitable in this financial year with all the business that we've won, and we continue to win in that space. I'll come to that in more details, but quick high levels. The U.S. market, we guided for $250 million at the higher end of the outlook. We were very delighted to be bang on target. We had a very weak flu season. Most of you know that Q3 and Q4 are very significant quarterly markets because of flu products, but it was a very poor year for flu for us. But we were fortunate to have generic Suprep launched during this period, and we are now in pole position with market share on this product with the contracts that we won. So we're very happy that some of that negativity or negative offsets on flu products are made up by new product launches. Although we have a lot of products approved, our calibrated approach to pricing, market share, right time to launch is what we'll continue. And we have guided that we will get to a $400 million size in the next 2 to 3 years. We believe the U.S. market will continue to be an important part of our business strategy, but with this disciplined approach, which is very differentiated with both products and go-to-market. I'm also pleased to let you know that we are now considered amongst the most compelling generic providers for reliability, and we have a service level of 99%, which is considered to be gold standards in the industry. So our focus has been on customer advocacy, right pricing, right availability of product. We have the lowest failure to supply. Now this is now sub $200,000 for a $250 million business, which is the lowest in the industry, and we're very delighted with all the enablers that have got about driving the U.S. business. We'll continue with this focus, but let me also announce today that we have started investing very heavily on newer technologies and portfolio beyond the 400 million generic mark as we focus on more complex generics. We just announced a partnership for nasal sprays in controlled substances. We will have our first filings in this financial year, and the first 505(b)(2) will probably be filed somewhere middle of next financial year. And there will be several more activities in building a portfolio, both by in-licensing and partnered in and also developed in-house. So earlier we did mention that we have 60 products that meet our criteria of margins. We continue to stay invested with that theory, but we take more time to launch those products and just to be sure that our disciplined approach is not compromised. We will continue to be, and we also see a lot of stability in the U.S. market, so I think the timing is also fine. As far as the other regulated markets, we have had three consistent, although the market grew by 19, almost 20%, but we had three consistent quarters of 40 million. To most of you who follow us, we build consistency before we focus on levering that. You will see similar numbers for the first one or two quarters in FY25, but then you will see significant growth in the second half in the other reg markets as we have already partnered our products. But as you know, in Europe and in other markets, it takes time when we partner products for our partner to launch products. Typically, our partners are global or national champions, and therefore they take a little more time than normal if we were going to market. Our access market, I mentioned that in my brief summary, but our growth markets are growing very nicely. It's grown almost by about 25%, and of course on a low base, and that will continue to deliver very strong growth in the coming years. We committed to a debt to EBITDA under 3. Pleased to announce that we are now 2.72 ahead of the outlook. The scheme with OneSource enables us to push down debt of 300 crores into OneSource, and we had a very significant free cash flow of almost 700 crores. That means almost 95% of our EBITDA to cash conversion ratio. We now have one of industry-leading cash-to-cash cycle times, and we'll continue focusing on these elements as we improve our free cash generation. We target to reduce our debt by an additional 500 crores after spending almost 200 crores in capex this year. We do not intend to achieve any of this with new borrowings. Consequently, we are now guiding for FY25 for debt to EBITDA under 2. Pleasing, of course, is the ratios, our key balance sheet ratios. Our ROCE especially has grown. Our exit run rate at 15% is pleasing. We have very ambitious targets around that. We have a gross block to asset turnover of almost 5 times. That, again, many of you will appreciate is industry leading. We'll continue to sweat our assets by smart product selection, technology improve and automation that reduces our OPEX costs. Before I conclude on Strides and open the house for questions, a quick note on OneSource. We have now received the name OneSource as official, so Stelis is now called OneSource. OneSource, on completion of its NCLT process, will be India's first spec farm CDMO. We have 40 unique logos day one. We have 17 GLP partners, including several first-to-file and sole exclusive players who are our partners. We believe that we are in a very, very strong position with our capabilities in drug product devices. Our erstwhile injectables business, the CDMO business, and the soft gelatin business, the incoming 2 businesses into OneSource have met 100% of its EBITDA of FY24. FY25 would be similar with very marginal growth, and that is because we expect more product approvals in both these divisions only towards the last quarter of FY25. We are pleased to confirm advice that we have now received as of late last night, all our approvals, including that from the SEBI, for the scheme to now go on to the NCLT, and we will now commence our NCLT filing in the next couple of weeks, and we will keep all of you updated on progress. Before I hand over take questions, we have made some changes. We have two very significant directors who have played very important roles in our company, Mr. Bharat Shah and Mr. Sridhar, both independent directors retiring. Consequently, we are very delighted to announce today the appointment of Subir Chakrabarti onto our board. Subir, for those of you who may know him, was until very recently the CEO of Excite and has played a very, very significant role in creating significant value there. With strong operational experience prior to his CEO role, we are all excited to have Subir on board and benefit from his experience. We will also add Aditya Kumar onto the board. Aditya, for full disclosure, is my son. He's been in the company for the last 10 years, and he will join us as an an executive director. Both are obviously subject to shareholder approvals. Like I mentioned, while I continue to be the executive chairman and will continue to play a significant role in setting the next level of Strides, I already announced my pleasure of having Badri as my colleague and managing director and CEO, group CEO of the company. I'm also very pleased to announce that Vikesh, who started his career at Strides, grew up the ranks with his brilliance and execution capabilities to be our new group CFO. I'm sure with his new changes and additions, not only will we add strength to what we have done in the last 2 years, but we are building the future for Strides. My apologies for a slightly longish introduction, but given that we are a little bit exuberant with what we have done, please pardon our indulgence. I did talk about the FY25 outlook, but for completeness, we expect to grow 12 to 15%. Bulk of the growth will come in H2. We expect EBITDA margins to be about 950 to 1,000 crores. I did mention that we expect the soft gelatin business to be soft in terms of EBITDA, and that is because we had two very big approvals in FY24, mainly icosapent and cyclosporin, where we have taken significant market share, and new product approvals are only expected in FY26. But we still will do a small growth over the $25 million EBITDA that we achieved. Consequently, the retained business will deliver approximately 750 to 800 crores of EBITDA, and we have that run rate already now, so we should be comfortable in growing that from the 800 crore exit run rate to about 950 to 1,000 crores. We expect free cash to be continuing to be a focus of the company, and we would end the year with a net debt of under 2, and at which time we think that we would be in a very, very strong position to be debt-free in 3 to 4 years from there on. We are guiding the U.S. business to be approximately in the range of 285 to 300 million. It's a tight range, but we are confident with approvals like Suprep and ICO and now Sucralfate today. These would still allow us to give away market share when we are challenged and yet grow the business without compromising the margins. So thank you all, and happy to take questions.
Benji, you can take the Q&A now.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Vishal from Systematics. Please go ahead.
Thanks for the opportunity. With respect to the US, can you share some color on how Suprep is doing for you in terms of market share, and have you scaled up to the full potential, or is there further ramp up possible here?
So typically, Vishal, in products like Suprep, when there are 3-4 players, we are very happy at a 25 to 30% market share. And I can tell you as we speak that we are at that spot already.
Okay. So we should not see further ramp up from Suprep going forward. You'll need new approvals to ramp up from here.
We don't need new approval for Suprep, but we typically, when it's a 3-4 market player, we typically are satisfied with a 25 to 30% market share as a philosophy.
Right. And second, on OneSource, you talked about a GLP-1 that is going to supply to customers. Is that GLP-1 already commercialized, or it's in clinical stages that you would be supplying?
One of the GLPs, one of our partners have got is expecting approvals, and we expect our first commercial supplies of GLPs to commence in this financial year.
Thank you. Next question comes from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir. Continuing this OneSource question on OneSource. So this CSA we have gotten for GLP-1 is for liraglutide, if my understanding is correct. And this, if you can correct me on that, if I'm wrong. And this is expected to come in H2 or in H1?
H2, and the product is correct.
Okay. So we have like 15, 16 different projects, and out of this, only one CSA you are expecting in FY25, not more than one?
Or this fully? Our work on GLPs are on Wegovy and Ozempic.
Yes, but I believe we have 6 in.
Yeah, and they are all patented till 26.
Yes, sir. I believe we have 6 in liraglutide. Only one of our customers are commercializing this year. Rest maybe in FY26.
I do not know where you get this information. We do not give how many customers for each programs in any of our conversations.
Sure, sir. You had shared all this information in one of the PPTs. So just wanted to clarify on that part. Anyways, on
yeah. We have one customer who is expected approvals. We may get every other customer's approvals too, but one customer has already started work on the commercialization of liraglutide.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes on the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking my question, and congratulations on a very strong finish to the year. 2 questions. One is on the U.S. business. The point that you mentioned about for our intent to grow the business beyond $400 million, in terms of some of the newer activities that we're trying to get in. How should we think about our U.S. business evolution? It gets to 400 in the next 3 years, and then how do we see it going from there on?
Yeah, thanks, Nitin. So what we are saying is that the current strategy of niche limited competition kind of limits our growth to $400 million. That's our aspirational growth. We are now very confident we can achieve that. Maybe we can add a few tens of millions of dollars additionally, but it's not something that can double from 400. For us to continue to benefit from the U.S. market opportunity, we have to be differentiated with either platform technology or leveraging our U.S. manufacturing activities which has got very specific capabilities around controlled substances, nasal sprays, very complex device liquids manufacturing, which can only be made in the U.S. And that requires capabilities which are currently beyond what we have in India. And that is what we are currently investing globally with partners, and sometimes we do it ourselves, both here in India and more in the U.S. eventually. And that set of products are typically in the $40 to $50 million opportunity range. So from the evolution standpoint, you'll notice that our original strategy in the U.S. was when we had a $3 to $4 million product average. The last few approvals have taken that ticket up to an average of $20 million, and now we are building portfolios in the 40 to 60 million range. So it's been a kind of, it's not tactical, but a more stated strategy that is just playing out, and it takes its time to play out.
And secondly, on the other reg markets, we've been extremely very positive on this space. Is there any particular reasons why the traction has not been as much as we probably expected at the start of the year?
No, it's still grown at 20%, but it's important to note that our other regulated market is almost B2B, right? So when we play with, when we license our products to global players, it takes time for them to launch the product because they typically launch in 15 to 20 countries at the same time. And therefore the launch period is much longer. And that's about it. Like I said, in H2, you will see these numbers changing quite significantly upwards. Okay. And lastly, on OneSource, the drug device play out, will begin to play out, that part of the business. Liraglutide starting off and then semaglutide as and when the patent expire. The other pieces of the business, especially around biologics CDMO, how should we think about that piece in terms of how that will evolve in terms of scalability, scale and size as we go through? So we are winning. So as you know, our drug substance capabilities were only established about 6 months ago. I'm now actually pleased to report that we have won our first major NCE contract there. And we keep winning business, so we are adding new customers every month across the platforms. Of course, everybody is excited about the GLPs, but our focus on non-GLPs as intense as it should be for a CDMO. So we are winning a lot of business in non-GLP programs too. Overall, we have guided $400 million of revenues 3 years from the time of listing of OneSource, if I'm not mistaken, in the last updates. We are very much on track to get there, both with GLPs and non-GLP programs. Thank you, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Praful Pora from InCred Capital. Please go ahead.
Yeah, hi team, congratulations. Just 2 questions on the U.S. business. Firstly, the guidance of $285 to $300 million, which is around 15-20% growth here. So here, what kind of price erosion are we building?
Well, the U.S. business is not a function of price erosion for us. Is that when we are challenged heavily, we exit the product. So we just get off a product, and if you look at IMS, you'll see us not in products that we were there last year if we are being challenged on pricing. So we don't have, because we have the luxury profile of several ANDAs that is at the cusp of being launched, we have a very differentiated way of modeling our U.S. business. And I have been consistently telling for 4 years that we do not have a price erosion for this reason. Not because we are not challenged, but when we are challenged, we let go. Rational challenge we keep, irrational challenge we let go.
Sure. And secondly, on the endo portfolio, what proportion of the the pending ANDAs are still viable to be launched, and would any of the ANDAs be significant from our perspective?
Yeah, of course. Our number one selling product now is an endo product. Endo portfolio product. So we probably have one more product that we will launch this year from the endo portfolio, which will have an exit run rate almost similar to our number one product. The endo P&L itself is a profitable P&L after 2 difficult years, and a significantly profitable P&L on a standalone basis. We have a lot of products. I would say 10 to 15 products at least on the endo portfolio that will meet our criteria. But these products in the U.S., we are constrained by the speed in which we can launch these products because we only have the capacity to launch 3 or 4 new products a year. And we then pick and choose which are the best ones in a lot. But like I said, our number one product in the U.S. now is an endo product. Erstwhile.
Sure. Thank you.
Thank you. Next question comes from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. So we are guided about 12 to 15% growth this year. So that is inclusive of all the product launches that we are planning, right?
Yeah.
So this will be the guidance will be same for FY26 and 27, if I'm not wrong.
Why would that be the same?
Because we have around 60 product launches scheduled for the next 2-3 years. So if we go by...
Aditya, product is not equal to revenues, right?
Right.
A product can be $4 million, a product can be $20 million. So that's not a good benchmark for you to do our model.
Right.
We have guided $400 million over the next 3 to 4 years. We are growing at 15%. If you continue doing that, we'll do that in 3 years. Right? The math is very simple.
All right. Thank you for that. Thank you for correcting me, rather. And also, in OneSource, can you please mention how are we planning to achieve such targets? Like, will it be, again, product-driven, or do we have other strategies there?
So we already have contracts signed, right? So we only need our partners to get approvals.
All right.
Right. Thank you.
Thank you. Next question comes from the line of Rupesh Tatia from IntelliSense Capital. Please go ahead.
Thank you. Thank you for the opportunity, sir. My first question is, can you please tell me what is the capacity for GLP-1, across OneSource network?
Rupesh, can you just speak up, or you on a speakerphone or something? We can't hear you well.
Hello. Hi. Can you hear me, sir?
Yeah, better.
Okay. So my first question is, what is our capacity for GLP-1 across OneSource network? Manual injectors, auto injectors. I mean, if you can give some color on that.
The right combinations have about 40 million unit capacity, and we will complete an expansion in FY26 to take it to 200 million units.
And this 40 million, what kind of gross block it is, and what kind of revenue it can generate?
We can't get into those details. You can send us a note. These are too granular details to give on an investor call, and we can then respond to you specifically.
Okay. Sir, and then I also wanted some color. Can you give us how does the billing work in this GLP? Because we are going to create, a final drug device, but the drug comes from our sponsor and the device will come from somebody else. So how does the, billing work in this?
Our revenue of CDMO is 100%. Everything else is passed through. So our partner pays for everything. We only serve, when we say our revenue could be $300 million or $200 million in the biologics division, not in the soft gel and injectables division, then if we do 100 million in biologics, 100 million is our gross margin.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Sandeep Dixit from Arja Partners. Please go ahead.
Thank you, sir. Can you hear me clearly?
Yes.
Thank you. I just wanted a clarification. In your opening comments, one of the sentences after you mentioned the guidance of EBITDA crores of 950 to 1,000 crores, did you give any guidance for the standalone entity or rather the retained business in Strides?
750 to 800.
Right. So, in which case the numbers are not adding up. That's the reason I asked. You have said $60 million as the guidance for one source.
We are not reading our deck properly, Sandeep. The $60 million has got 3 divisions. What is going from Strides is $25 million.
Okay.
What is going from Strides is $20 million. Okay? That's all.
Okay.
Everything else coming from other parts which are getting merged.
Right. Got it. Thank you.
From the 950 to 1,000, you have to only minus $20 million.
Correct.
Thank you.
Thank you very much.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for the question again. Arun, just clarifying, you mentioned the increased capacities for the drug-device combinations will be 100 million or 200 million?
200 million.
Goes almost 5x.
Yeah, we were thinking of 100 million, Nitin, when we spoke 3 quarters, but we currently with the contracts that we have signed up and looking at the success of some of our partners in their litigation and pole position status, we are obliged to double our capacity to 200 million. So yeah, we're going 5x. And we rather do it at one go because equipment cost is not the most expensive. I mean, it's the most expensive part, but the lead time for equipments are too long in this.
And Varun, where does it place you in terms of, rather with this capacity in the various drug device CDMO players?
We do not have specifics of our competitive landscape, but I would assume top 5.
Okay. And secondly, on our on a Strides business, we've done a pretty decent job on controlling our overhead costs, optimizing our cost structure the whole last several quarters. I mean, do you still see opportunities for optimizing the costs further from here on, leading to further expansion of margins over the next 2-3 years?
Yeah, like I said, Nitin, we probably have about 200 to 250 basis points of margin expansion through cost improvements and completion of network optimization. And that is why we said our dream goal is to get to our 21.5% peak EBITDA percentage wise. And we think we can do that in the next 12 to 16 to 18 months.
Okay. And with the strategy that you're following in the business, what is in your assessment, the X of the soft gelatin business, sort of a peak profitability this business can really get to?
So I think minus one source also we can comfortably grow at that 15% CAGR. And our target then should be to get to 21% EBITDA and be debt-free. This is our goal in the next 3 years.
Okay. Thank you so much.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Rohit M., an individual investor. Please go ahead.
Hi, sir. Thank you for the opportunity. First question is on the other regulated business. So we had a strong year. Yeah. So first question is on the other regulated business. We had a strong year for the other regulated at 20% YOY growth. Could you highlight which were the key markets that contributed to the strong growth? And are we confident of maintaining this growth momentum going forward in the next year?
Yeah, mainly Germany and Australia and the Nordic regions.
And any guidance on the next year?
We can't give a percentage guidance, but we said that the company overall grows 12 to 15%. ORM will continue to be a big part of that growth, but more growth you will see in H2 rather than H1.
Got it. Second question is on the gross margins, which were around 60.7% in the Q4. Can we sustain this 60% plus gross margins going forward, and how are we looking at that?
Yeah, plus minus 2%, it is doable. So we have done that for 4 quarters or more, so we are now in that zone. We shouldn't have a problem.
Good. Thank you. That's it from my side.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Jagdish Sharma, an individual investor. Please go ahead.
Hey, thanks for giving me this opportunity. Congratulations for a good FY24. My question is on US business. What sort of investments would we need incrementally to take our US business to 400 million in 2 to 3 years?
Nothing. We have all the products already approved. We have 265 plus ANDAs, of which we have commercialized only 65. So we have plenty of approved ANDAs. Our R&D for the 400 million run rate is almost done. We don't spend any money on that part of the business. We put more money on the 400 beyond story.
Okay, sir. Thank you.
Thank you. Next question comes from the line of Rahul Bharadwaj, an individual investor. Please go ahead.
Hey, thanks for the opportunity and congratulations on the good set of numbers.
Hey, Rahul, can you speak up?
Yes, sure. Could you share a bit more guidance on possible demerger situation for OneSource and the vision that we have over the next couple of years for this particular division and how we aspire to grow in the CDMO division?
You need to repeat your question on OneSource.
Yes.
You're feeling while you speak.
Any details that you can share in timeline for the demerger and how we plan to grow in the CDMO division over the next couple of years?
So we got last night the demerger approvals from SEBI, which was the last step prior to the court process of the demerger, which is called the NCLT process. We expect to file in court the necessary documentation this quarter. Typically, it can take anywhere from 3 to 4 quarters for the court process to get completed and about 60 days for the stock exchanges to list the stock. But we got the last and most important step was the stock exchange approvals and SEBI approvals, which came in last night.
Thank you so much.
Thank you. Next question comes from the line of Vibha Ravi with Sightline. Please go ahead.
Hi, can you hear me?
Please go ahead.
Could you tell me if OneSource can be expected to benefit in any way from the shift away from certain Chinese companies like WuXi? I know it's still time for the Biosecure Act to come through, but is there any planning on that front, and can OneSource be expected to benefit?
So clearly, the Biosecurity Act has been diluted quite significantly, and there is a 7 to 8 year window for companies dependent on China to find solutions or alternative solutions. But we are seeing a significant amount of new RFPs for biologics, and I think the China Plus One on the biologics is playing through. We haven't seen so many RFPs in the last 1 year that we are seeing in the last 2 quarters. So we believe that there is some momentum around this whole Biosecurity Act and at least new programs coming to India or another nation as a first choice. To answer your question, plain and simple, yes, we are seeing that. We are seeing it benefiting Stelis or OneSource.
Okay, thanks. And one more a bit broad-based question. So, is the Middle East crisis expected to begin impacting input costs and or logistics anytime soon, or it's like further out?
So not on supply chain of materials, because earlier it was more to do with geopolitical and COVID and other issues. The Red Sea crisis is now, I would like to say, behind. The shipping premiums have dropped quite dramatically. But yeah, this is the nature of the beast, right? So we have to be vigilant. For now, it's business as usual.
Okay, thanks. And can I just get in one more question?
Please.
Okay, could you talk a little bit about how the alliance with Orbicular for nasal sprays is progressing?
Progressing very well. It's one of our more important partnerships. I did mention that we will have a first filing this year. We expect to complete the entire platform program during the course of the next 12 months, and we should expect approvals thereafter. We have significant interest on these exclusive controlled substance programs, and in partnership with Orbicular, we are finding the right go-to-market strategy. Yeah, but we are very excited with our partnership with Orbicular. We consider them to be best in class, and we're delighted to be partnered.
Okay, thank you so much.
You're welcome.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you all. Really appreciate your time, and thank you for your patience as we build Strides. Appreciate your time, and feel free to write to us if you have any questions. Thank you and good evening.
Thank you. On behalf of Strides Pharma Science Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.